Hi everyone, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 11th CO2 report of this year. But before I go into this review, I'd like to remind you about our new service, FuturesTradingGuides.com. Please check it out if you haven't yet done so. Thank you. So back to the review, and with our first market, corn, we're going to start analyzing the reports. So as you can see, we have a 16% change in commercials positions in corn. This is a bearish COT change signal, a bit smaller than last week, but as you can see, last week's COT signal was not that effective. Prices could continue their rise, but of course, if you look at the chart on Friday, there was a steep decline in the market. This could continue based on the COT change signal, of course, but if we open a 5-year chart, everything becomes a bit more easier to see, at least from a COT Extreme perspective. There is an unquestionable bearish COT Extreme in this market. 350 report extreme in commercials and 351 report extreme in large speculators positions. And if you look at the chart, you may see that these extreme situations in the past were pretty effective signals in the corn market. So of course we can see that traders are not going to increase their positions in this direction forever. So eventually they will stop. Large speculators will stop increasing their net long positions, while commercials stopping increasing their net short positions, which of course will eventually result in falling prices, or that's at least what we're expecting to happen in corn. So be prepared. Corn is a good opportunity in the next couple of weeks. The next market is live cattle, where we have a 15% change in commercials positions. In this case, we are talking about a bullish COT change signal, possibly pushing prices higher in the next few days. Jumping to the 5-year chart, you can see that we are in between the two extremes, but still closer to bearish extreme levels, suggesting prices could continue their decline. That's of course a question. I would suggest moving on to other markets. From the COT reports perspective, there's not too much here. So let's have a look at lean hogs, where we have a 14% change in commercials positions. Again, bullish COT change signal. What is interesting is that commercials just gone net long, and they're net long together with large speculators, meaning only the small speculators are taking the short side of the market. They're pessimistic, as you may see, which of course in itself could be considered a bullish sign. And as we open the 5-year chart, you may see that the COT Extreme is definitely bullish in this market, and we could expect rising prices in the well, maybe near, but definitely medium to long term. Jumping to large speculator COT Extreme, you may see we have sugar on top of our list with an all-time extreme. Jumping to the 5-year chart, it is unquestionably visible, so we may see this decline ending, this downtrend ending in sugar market, and we could see a change, a major change in the trend. The last time we had a signal for bearish movements, or the end of the rally that we had in the market, was, as you may see back over here, in mid 2016, and it was a beautiful signal. But you know, that was a long time ago. Now we're in a downtrend mode, and we have this bullish extreme in the market, so we should be expecting a change in this trend. Of course, this can continue for many weeks. I'm just warning you guys not to forget about that fact. These extreme signals could be in the market for many weeks before the market reacts to it. We talked about corn, so we're going to jump over that and look at soybeans, where we have this 85 report extreme in large speculators. And if we jump to this 5-year chart, you can see it on a wider scale. It is an unquestionable large bearish COT extreme signal. The last one was this relative bullish one, which was an effective one, as you may see. And you can see here that we had this the largest bearish extreme in mid 2016, pushing prices down, very similar to the corn market I was just showing you. So again, of course, we were talking about correlating markets. So we're not surprised about that. This extreme may increase to higher levels before the market starts reacting, so that's just a warning again. So that's that, and we're going to move over to cocoa, where we have a 80 report extreme in the market. Again, bearish COT extreme, as you may see, but there is unquestionable space left to reach those really high extreme levels. The largest extreme on this 5-year chart, as you may see, was back over here in 2014. That was the most bearish extreme in the market, which of course, as you may see, did not result in anything in a long-lasting decline. There was a bit of a decline, so the signal itself was effective, but market could continue its rise and eventually top out over here in 2015, and since then prices have declined. Now we had this bullish extreme in middle of 2017, this range over there, which ended this decline, and now we are definitely seeing prices rising. And if this is the point where the market should stop rising, that's of course a big question mark, because there's still plenty of space left to increase the extreme towards the bearish side, which of course would result in further rally in cocoa. So that was all for this COT review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.